What's up, everybody, and welcome back. So what are going to be some of the top trends that we're going to see in 2023, 2024, and 2025, the next coming big cycle for cryptocurrency? I think that we're going to see trends around the AI kind of craze that we've seen since ChatGPT received its massive investment from Microsoft, as well as Google looking at Bard. And I think ZK Sync, ZK Snarks, and anything building on top of the zero knowledge proofs is going to also be very big, as well as tokenized cryptocurrency, tokenized platforms, and tokenized assets, especially with the pressure coming down from the alphabet boys on the cryptocurrency space and their push to want to basically name everything inside the cryptocurrency sphere as tokenized assets. And there is an interesting article actually all about this on the Defiant. This actually came out back in December, and I was kind of just doing a little bit of background research for this topic, and I came across this article, and I thought it was quite interesting. I'm going to read through the article, and I'll give you guys kind of my thoughts as I go along here. The article is titled Real-World Assets Poised to be DeFi Growth Engine, and this is out of Coinbase. The push to marry DeFi with real-world assets just got a big boost. Coinbase, the number one U.S. crypto exchange, with a $7.5 billion market cap, predicts that institutional entities will seek to use permissioned DeFi and drive innovations in the tokenized real-world assets, or also now being known as RWAs. Permissioned DeFi. So unlike things like Uniswap, where anybody can just use Uniswap, permissioned DeFi is probably going to have something to do with KYC, as well as any form of tokenized, regulated cryptocurrency or asset that the alphabet boys deem to be the one that can be used within these permissioned DeFi platforms. I'm sure that this will kind of develop as we go along. We'll kind of read further down here. On-chain, the forecast picks up on the push by DeFi stalwarts MakerDAO and Aave to embrace the burgeoning market for putting bonds, real estate, and other traditional assets on chain. So you can kind of see here, if they're going to put bonds, real estate, and more traditional assets, it's probably not going to be in the fully decentralized, permissionless sense that we've been used to seeing when it comes to things like Uniswap. In its 2023 Crypto Market Outlook report released on Tuesday, Coinbase said it expects to see more dApps adapt their platforms for permissioned DeFi activity as regulated institutional entities seek more involvement in the sector. And this is not entirely a good thing, because the more that these platforms adopt, these permissioned, DeFi tokens, the less likely it is going to be for the permissionless space to stay strong. They're quoted as saying that this could have compelling use cases for settlement and cross-border payments alongside innovations in the tokenization of real-world assets, the company said. Permissioned DeFi would likely target different use cases and solve for different problems like uncollateralized debt compared to permissionless DeFi. So hopefully what we're going to see is we're going to see permissionless DeFi and permissioned DeFi exist kind of in a coincide along one another. Hopefully that's what we're going to see. Coinbase highlighted significant RWA projects that are already underway, including a partnership between MakerDAO and Société Générale, a major French bank that is issuing AAA-rated French home loans as collateral to borrow up to 30 million DAI. And there are other, these tokenized protocols out there that are also making these kinds of connections with different banks. I'll go over that a little bit later here. It also highlighted the project in which JPMorgan Chase, DBS Bank, and SBI Digital Asset Holdings traded tokenized currencies and sovereign bonds on the Polygon network last month. And they're making big moves actually on Polygon right now with this. Permissioned platforms. Coinbase tips that established DeFi protocols may soon launch permissioned liquidity pools, and that's going to be a big one, that are compliant with anti-money laundering or AML KYC regulations, separate from the permissionless liquidity pools used by non-institutional participants, and that's people like yourself and I. Aave, the leading DeFi money market by TVL, Total Locked-in Value, launched its permission platform ARC in January, with 30 institutions initially whitelisted for the platform. It launched on Ethereum's leading Layer 2 networks Arbitrum and Optimism later in that same month. So this would have been last year. Colin Cunningham, head of business development at Centrifuge, which is another major kind of Polkadot related project, a DeFi platform for financing real-world assets, told the Defiant Coinbase is spot on in their assessment that tokenizing RWAs and other off-chain assets is the next frontier for DeFi. And I would actually have to agree there. Marrying the two worlds and trying to make both sides of the argument happy is really, I think, what they're ultimately trying to do. One will push out the other. I really do think that is the case. And that's just kind of inevitable, in my opinion. Given market conditions, it's important to acknowledge the necessity of crypto providing real-world value, and RWAs represent that, Cunningham said. I hope RWAs finally get their due in 2023. Crypto liquidity is starving for yield. And I guess that's kind of true. That remains to be seen. Timo Leahy's, the co-founder of Swarm, which is another kind of one of these tokenizing protocol funds. It's actually been around for a while now. A regulated platform for accessing decentralized finance, agrees that tokenized RWAs will be a major narrative in 2023. The momentum is shifting, goes on to say further. The digitalization of real-world assets will be a momentum-shifting theme for institutional crypto in the year ahead, with stablecoin technology at its heart. And this is the same from the co-founder of the Swarm Fund, or Swarm Network, sorry. Digital assets exhibit a low correlation with other traditional assets such as commodities and bonds. Regulated DeFi projects are actively pursuing the introduction of a class of tokenized collateral from TradeFi, as the lack of correlation is a feature and not a bug. Leahy's suggested that RWAs can be brought on chain using the same structure that is employed for fully backed fiat stablecoins. Since stablecoins are already a category of tokenized RWAs with a 100 billion plus market cap, it is only natural to extend the same token structure to public stocks, bonds, ETFs, and other assets. And that's what things like, the Swarm network will be able to do, along with others. Making a surprise connection, Coinbase also expects that RWAs will be providing a ground for non-fungible tokens. And I think that's one of the biggest use cases for NFTs, is that they will be able to tokenize certain things like insurance and bonds and real estate. The company said that the NFTs are increasingly being used to certify and authenticate real-world assets on-chain, including real estates, physical goods, and financial instruments. Coinbase added that RWAs are an opportunity for non-fungible tokens to expand beyond largely speculative use cases, and that is because of the contract standards ERC 721 and ERC 1155. I would suggest reading into the contract standard capabilities for both of those if you want to get a better idea as to why that's the case. But the long and short of it is that they provide much more capability for doing things like that compared to their earlier ERC 20 tokens. Themes such as a digital identity, digital footprint mapping, soul-bound tokens, which is an interesting kind of thing that sprouted up last year, and the tokenization of real-world assets have the ability to strip away the speculative nature of art and collectibles and emphasize the fundamental advantages of non-fungible tokenization. And I do agree with that. Despite Coinbase's bullish outlook for RWAs, the firm warned that new forms of real-world assets will be slow to come on chain due to regulations, and that's true. While issuers are resolving the financial and legal hurdles to tokenizing other less liquid real-world assets like real estate, the market is still underdeveloped, and it is. And the reason is mainly because of the red tape around it, as well as some of the hurdles with dealing with the technology. It's still very much in its infancy, but I think that that's where NFTs are going to have their biggest use case, is actually providing an avenue for things like real estate to finally end up on chain. And so this is kind of a good thing, especially if you're going to talk about expanding DeFi, which is what mainly people in the DeFi space really want. It goes on to say the total value of RWAs on Ethereum is actually $612 million, down from an all-time high of $1.75 billion in quarter two. And this is talking about last year, of course. And so there's already a vast amount of these kind of like tokenized products. Polymesh actually put out a little thing here for you guys to look at. And you can see there's a bunch of exchanges brokers, custodians, investment firms, issuers, tokenization platforms and protocols, and layer 1 blockchains that already provide all kinds of avenues for this. And so the groundwork is being laid and the foundations have been built out. Open Finance is one that I've heard of. Signum, yep, that's definitely one that I've heard of before. Black Mantra Oasis Pro, that's one. Genesis block. Where else do we got here? Grayscale, of course, the big one, the big player. Custodians, BitGo, BankX. Yep, JP Morgan is an issuer. That's crazy. It's really crazy to see like JP Morgan, Goldman Sachs, these bigger, heavier investment firms that have been around for forever, kind of getting into the tokenization space now. Tokenization platforms and protocols. Polygon, Toki, yep. Securitized, Swarm, the Swarm network. Tokensoft, I've heard of that one before. And then these layer 1 blockchains, Ethereum obviously. Stellar, Polymesh, Algorand, which is one that's really been coming up and I think is going to get a lot more looks soon, and Avalanche, as well as Tezos and some other ones here. But you can kind of see like the foundations are built for this. And so it's kind of what happened back in like 2020, 2019. DeFi was just getting off the ground. I think that Aave wasn't even Aave at the time. It was ETHLend. And so it took some time to really kind of just find that sort of killer dApp that set the next crypto space like alive again. And it really led to a lot of the things that we saw happen in 2022 and in 2020 happening now in 2023. And so I think that the tokenization of real world assets on the blockchain is going to be a big trend, alongside with the ZK hype that you're going to see really kind of like take off soon once they get closer and closer to their own mainnet. And then as well too, you have this AI craze. And I think that it's truly just hype personally. I think Big Data Protocol has like a pretty good use case, and I kind of like what I'm seeing with them. You have Singularity and some other ones that can provide some actual like real use cases. I think there's another one built on the Arai chain, AI Right, which actually does have a patent for their verification of NFTs, which could actually help play a role in the tokenization of NFTs. But again, that remains to be seen. I do personally believe the AI thing has got a lot to do with hype, and that is definitely tied to the investment that went into ChatGPT and some of the other kind of AI chatbots and image generators that we've been seeing. But that is how the crypto space does work. A lot of it is based on hype, and the hype then drives how the market goes, which will then drive developers and other people that are looking to capitalize on that and build projects around it. We saw the same thing happen with the meme coin market, which just exploded thanks to things like Dogecoin and Shiba Inu. So I'm sure more remains to be seen on that front. I will leave a link to this article so you guys can read through it yourself and kind of go through some of the other articles that they have kind of linked here and some of the videos that they have on here. And I encourage you to read them because they're definitely very interesting. This is for sure going to be one of the pillars, I think, of the next bull run around cryptocurrency. I'm not entirely sure or sold on the idea of a 2023 cryptocurrency bull run. I think that we're going to see the beginning of it, but 2024 and definitely into 2025, we will probably see a really big explosion in cryptocurrency again. And I think that this tokenization of assets, real world assets on a blockchain, will be a major reason as to why that happens. Let me know what you guys think in the comment section, if you agree with me, if you don't. If you enjoyed the video, please leave me a like, consider subscribing and sharing this with your friends, and I will see you guys on the next one. Take care.